Hey guys, Adam Rose, Vice President, Senior Loan Officer of Western Ohio Mortgage here in Sydney, Ohio. Today is another Mortgage Guy podcast, and we're going to do a little national market update here. And I want a little bit of feedback, anybody that's watching on TikTok or Facebook or YouTube, because it's really about inventory. You know how we talked about how much of an inventory issue we've had over the last couple of years. It's finally starting to kind of switch gears a little bit, moving a little bit more towards buyer's market. Not totally, all right? So don't be sitting here bad-mouthing me because I said that. But it is, we're seeing certain homes are still going over the ask. Right? Certain homes are still going 24 hours, 48 hours after it's listed. And those homes are perfectly matched or perfectly priced with a very high-quality home. It makes sense. So people that are doing their jobs well, those homes are moving. Now, again, this isn't a knock. Man, this thing's loose. It's not a knock to anybody, okay? But the total number of listings topped 1 million in the country. First time since pre-pandemic. So that's a big deal when you think about it, okay? Now, why are they sitting? Now, it's not just because everybody decided to list their house all of a sudden, but if you've noticed, some homes are sitting a little bit longer than usual. And I've heard some different reasons why they sit longer, and this is why I want your feedback, commentary, what have you. Is it price? Right? We've kind of been in this high price environment for 3 years, 4 years now. So I don't know if it's that. Is it the rates? Because people are still continuously buying. Is it the concerns about the economy, which I thought are getting a little bit better? Some of the trade deals are starting to work out for us, and people are starting to calm down a little bit. The market's starting to settle. Not as much turmoil over the last few months. I think, personally, and this is probably a big piece of the feedback that I've been getting, is the quality of the listing for the price, right? The quality. I've noticed there's a lot more homes out there that really aren't turnkey, and they're asking a lot of money for them. Outdated homes, things of this nature, need a new roof, need a new furnace, need a lot of new things. They're asking for top dollar. And I think when I talk to clients, that's been kind of the top issue in their mind is they're okay spending that higher price point. They're okay with the rates because they know eventually at some point they'll come down, right? But it's the quality for what they're getting, what they're paying for, right? Does that make sense? So I'd love to hear some comments, some feedback from agents, other lenders. I'm just curious what you think. Homes are sitting a little bit longer, and that's the biggest reason why we've hit 1 million homes in the U.S. on the market, and that's the most since, like I said, pre-pandemic levels, and it hasn't been like that for 5 years, 5.5 years. Jesus, 5 years. So that's an interesting look at the market, what's going on there. So I'd love to hear what you guys have to say about it. Quick update on rates. So I don't think we have a lot of great news. I mean, there's been very volatile. Like I talked about in my last podcast, I said the market's been a little turmoilish, right? They've been up, they've been down, they soften, they're going up a little bit more. Last week or so, we've seen a little bit of softening in the market, not a ton. So rates are sliding a little bit, but the Federal Reserve Watch update, in essence, we do believe after some of their meetings that the rates are going to stay consistent from the Reserve. Again, not a direct correlation, if you watched our prior shows, not a direct correlation between the Fed funds rate and mortgage rates, but it's a good sign for the bond market to decrease slightly as well, right, the 10-year Treasury. But after some of the Fed meetings, it looks like the consensus is they're going to keep the Fed funds rate between 4.25 and 4.5. Again, that's the ability for your bank to borrow money from the Fed to lend out. 4.25 to 4.5 on June 18th meeting, July 30th meeting. But then on September 17th, they do expect maybe a 1/4 to a 1/2 point cut, and that's a 63% confidence ratio there. So they think it's pretty good chance. If we stay on the continuous path that we're on now, there's a 63% chance we'll get a 1/4 point rate cut in September. And oddly enough, that's 3 months away? Good Lord. This summer is going to disappear. So just a heads up, that's some good news for the market. It looks like the job numbers are pretty solid. So we've got some strengthening in the economy. Again, still turmoilish. There's a lot of stuff happening out there in the world that can upset that apple cart. But for the most part, it looks like consumer confidence is starting to rise a little bit. Now, I want to give another update for any of you home buyers out there that are shopping right now. If you're in the middle of the process and you're looking for homes and it's been a tough time for you, what I want you to do is check in with your lender every now and again. All right. Make sure if something changes in your financial picture that you inform them, especially if someone loses a job. That's not good. Okay. And don't act like it didn't happen until we find out about it. That'd be fantastic. I really appreciate it. Just a PSA, okay? Other than that, guys, that's all I got for you this week. Sorry I don't have the dog on this week. I'll try to bring her on a little bit more often. I think you guys really like that. But again, drop a comment in here. Tell me what you think about what's going on in the market, why homes are sitting a little bit longer. Love to hear your feedback and your opinion on it. Again, I may be way off base. Who knows? And I'm just hitting stuff. But remember, check us out on YouTube, Apple Podcasts, and Spotify, and we'll have a little bit more in-depth conversation in the upcoming weeks. Thank you.